guys, welcome to this backtesting spreadsheet video. The purpose of today's video is to run you through what this spreadsheet does, what you're going to need to be inputting into the spreadsheet, and also the significance of the figures that this spreadsheet spits out at the other end. So to get started, just go to ottrades.com, click on the free stuff tab at the top here, and it's going to take you straight to the backtesting spreadsheet template. We've got the list of things here that you're going to need to input into the spreadsheet, and we're going to run through that in today's video. So here, please watch a video tutorial. I'll leave this video below here, so there should be a video box just beneath this download button. So go ahead, click download. I don't know why it saves it as this weird name, but save it wherever as whatever you want. Just click save there. Go ahead and open that up. Enable editing, and full screen. So you can see here we've got one target and two targets. For the purpose of this video, I'm going to use the two targets, but they're both exactly the same principles. You only need to input these items here. So let's go ahead and open the two targets tab. Now on the left hand side you've got a pair, which would be the currency pair you're trading on. You've also got a strategy, so just a basic explanation of why you're entering the trade. It might be moving averages, double top, whatever. For my example, I would use advanced or harmonic patterns, so I might put in there advanced butterfly, advanced cipher pattern, whatever. Chart stop loss, so that's going to be your initial stop loss that you're opening the trade with. The initial take profit 1 and target 2, you put these in here. The reason they're the initial targets. For example, if I were to trade in advanced formation, if I were to put a limit order at the D point, if that limit order's hit, I might have a 382 Fibonacci retracement target for my target 1 and a 618 target for target 2. I'll run through an example of that after, but as price moves against me, I'll stretch the fibs to match the price extreme, and that's going to alter where that the initial 382 and 618 targets are, and that's why we've got the actual take profit here. So that would be the initial take profit from where you started. If you end up moving them higher or lower, whatever the direction of the market goes in, you would then input your actual take profit. Once the profit targets are hit, you put your profit target 1 in here and profit target 2 in here once they're hit. Now you might hit take profit 1, move your stop to break even, and price moves against you. In that instance, you would put your initial target, whatever got hit in here, and then you put your break even, so 0 in here. Or if it's a losing trade, you just put minus whatever your stop loss was in both of these boxes here. Now this is where the magic happens, this is where all the formulas are. So you won't need to be inputting anything into these boxes. These boxes will appear with all the data once you start inputting your stuff into these boxes. We'll run through this here. This is optional target, number of pips. So like I was saying here, if this was a 382 target and a 618 target, I might want to test the 50% retracement as well. So I can put the number of pips to the 50% in here. I can put a 1 or a 0 if it hit or if it didn't. I can then copy, I can put a formula, I can copy this whole spreadsheet across. I can then put a formula in here. Say if I wanted to use a 50% retracement target rather than a 618, I've already got the details in here. I can then just put a formula in here saying if this equals 1, then put the number of pips in this box into this box. And then also if it equals 0, just put 0 or negative whatever, if it's a stop loss, whatever. That's the way I do it. You can alter that, change it, use it if you want or not. Comments in this box here, so that's going to be date, time, any news events that happen during the trade management that you've taken, anything like that, maybe your emotions when you've taken the trade. And then the spread, so you can find this on your broker's website. They usually put it as a minimum or maximum spread and an average spread as well. I usually use the average spread in these boxes, but you can put it as a maximum if you're a bit more conservative, because you know it will never go above that. So to get started, let's get started with the spread. Got it in the top left here. Password to edit the cells is OTFX. So double click on the cell, capitals OTFX. Okay, you can now edit all the cells. Now any cell with a formula in you can't get into, because I've protected the worksheet, so you don't have to worry about editing any of the formulas. They'll all do it itself for you. All you've got to do is input the chart data. So if we get started with the spread, for the purpose of this video, I'll just put 1 in the box. 1 in the box. So target 1, target 2. We'll run through all of this information here later. So for example, let's just say Euro USD strategy. I'm going to use an advanced pattern, whether that's cipher, whatever, it doesn't matter for the purpose of this video. Chart stop loss, let's say it's 50 pip stop loss. Now I use a 5-digit broker, so just to confuse things, my 50 pip stop loss is actually 500. But anything that I write in these boxes just divide by 10, so 500 is actually 50. Take profit, let's say, is positive risk reward, so 75 pips, 750. And second profit target at 100 pips, which is 1,000 for me. Now let's just say, you can already see here we've started to fill these boxes in. Let's just say we hit both targets, so 75 pips and 100 pip target. Now in these boxes here, you see risking 1% of the total account equity, which starts at 10,000. You can get into here and change it to whatever you want, 1,000, and we'll leave it at 10,000 for now. So risking 1% in these columns, risking 2% in these columns, risking £250 in these columns. Now I wouldn't suggest using a fixed dollar, pound, euro amount, whatever your account value's in. I wouldn't suggest using that. I would always suggest using the percentage rule. So I rank my trades from A star to C. My A star trades I risk 2% on. My A trades I risk 1.5% on. B trades 1% and C trades 0.5%. And I take, if two happen at the same, I can only trade 2 trades at a time, and if another trade is, I've got the same setup on one pair or whatever, I'll always take the better ranked trade. So I take an A star trade over an A trade, an A over B, and so on and so on. So like I say, in these boxes, risking 1%, 2%, or a fixed dollar amount. Now, I would, for this tab here, using 2 targets, completely ignore this section here, really, because it doesn't take into consideration the second target. This side here takes into consideration whether you hit the first target, whether the entire trade is a losing trade, whether you hit the first target and break even on the second, or whether you hit both targets. This side only takes into consideration the first target, it doesn't take into consideration the second. So if you were to hit both targets, it would only realise that you've hit one of them, the first one. So only look in these boxes here, really. And you can see result number 2 is actually, we exited the trade at 100 pips. But here it's only put in 99.9 pips, and that's because of our spread of 1. So it's minus the spread. Hope that makes sense so far. Now for each trade, because we've got 2 targets, but we're only risking 1% over the total trade, each target we're going to be risking 0.5% of the total account value on. So for each target we're open 2 trades, both at 0.5%, so total for the trade would be 1%. I hope that makes sense. So in this example, we're risking 1% per 50 pip move, or 0.5% per 50 pip move, but we're opening 2 50 pip stop losses, okay? So one 50 pip stop loss for the first target of 750, another 50 pip stop loss for the first target of 100 pips, okay? Now, so that means we're risking 0.5% per 50 pips, or 0.5% per 500 on this spreadsheet. So first target, 750, 1.5 times that, times our stop loss, and we've hit the first target. So 1.5 times our stop loss, which is 0.5% of our account. 0.5% of our account, 10,000 is £50, times 1.5, 750 to 500. So 50 times 1.5 is £75. So we've made £75 in this trade. Now I'll take that to the next targets. We've actually made full 1% on this trade. So we've risked 0.5% on the one trade, risked 0.5%, and we've made for 50 pips, and we've made 100 pips. So 0.5%, risking 0.5%, we've made double what we risked. So we've made 1% on this trade. 1% of 10,000 is £100. So we made £100 on this trade. Now, if we go to the next one, 500, and let's just keep the figures the same. So our targets are 750 and 1,000, so 75 pips and 100 pips. We're going to exit the trade, we'll take a winner on the first one, and we'll move our stock to break even, and then price will move against us and cut us out of the trade at break even on the second trade. So you can see here, risking 1%, we have risked 1% of 10,100, per 50 pip move. We've caught a 75 pip move, so 1.5 times 0.5% again, 0.75%. 0.75% of 10,100 this time, so every time it will compound it and it will go 1% of what your account value is. So 0.75% of 10,100 is now 75. Hope that makes sense. So if we go on to the next one, but the next one, if we do the same values, but this time it's a losing trade. So we're going to exit the trade at a loss of our number of pips we risked. So we've now lost a total of 0.5% on the first trade and 0.5% on the second trade. So we've opened two trades in total, risking 0.5% on each trade, so a total of 1%. So we've lost a total of 1%. From here, total of 1% of 10,150.56, and a total of 1% lost on 10,175.75. Leaves us with £10,073.99. So I hope that makes sense. That's basically all the scenarios that you're going to have. I mean, obviously the figures might differ, so you might have 500 pip stop loss, 750 pip profit target, 1,000 pip second target, 75 pip target, 100 pip target, and then you might make, if you restretch the fib levels, you might make only 600 on the first trade and 800 on the second trade. So the maths is getting a bit more confusing now, so we're only making, what's that, 1.2% of 1.2 times the initial risk. So 1.2 times 0.5% is 0.6%, if my maths correct, on this trade. So we're winning 0.6% of the previous account value, and on this one we're winning 0.8%. I'm going to guess that is on the previous account value. So notice that these account values aren't the same because this side here isn't taking into account the second targets, whereas this is taking into account the first and second targets. So that's what I mean by you want to be using this side really, because the account value is going to differ between the two. So if I were to run you through a real trade now, so if I go to my MetaTrader, good day so far. We've got two trades running at the moment, both up profitable. So let's take this trade for example. This was actually a losing trade. So if you were to set a limit order at this level here, 113,405, and stop loss at this level here, 113,705. So the total stop loss value is going to be 113.705 minus the entry 113.405 0.3, so 300, 0.3, 300. We put that in here, 300 as our stop loss. Now first targets, if you were to use the 382 fib level from A to D leg, so pattern completion 382, 112983, so let's do the math again. Everything. 113.405, where we got in at, minus 112.983, so it gives us 422 first target, so positive risk reward here. So 42. Yep, 422. And then the second targets, we're going to be aiming for 122724, which is the 618 target. So let's do that calculation again. 113. Sorry if this is going a bit slow for you guys. Little trick, if you're watching this on YouTube, just go down to the bottom right of the screen and you can increase the speed of this video if I'm taking it too slow. I just want to make sure everyone understands it. So increase the speed to 1.5 or 2 times, or just skip across to where you're after. So 113.405 minus 112.724. Got 681. So 681 target, 68.1 pips target. So in this instance, price moved higher. So we would drag this higher and higher as price moved. So at this point, as price started moving down, we'd be looking at the 382 targets being around 113, 134. That's what I mean about the initial targets differing from the actual profit target that you take. And then the 618 is going to be moved higher as well, around that level. But we did in fact cut through our stop loss here, so this trade would have been a loser, and we lost 30 pips. Minus 300, minus 300. And there you can see we've lost a total of 1% of the previous account value. Okay, I hope that makes sense. So if we go across to the important part now, obviously you've got the spread. Total number of trades, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Total number of wins. So we've got 3 winners, 2 losers on the initial targets. 3 winners, 2 losers. 3 winners, 2 losers. 2 losers, 2 winners, 2 losers, 1 break even. So it should be 2 winners, 2 losers. 2 winners, 2 losers. Average win in pips, average loss in pips. Win percentage, now notice this only adds up to 80%, and that's because I've put it separately here for the target 2, if we break even, how many times we break even. So technically, you can use, for the target 2, you can use this as the win and loss percentage, because technically you would have won, even if it breaks even, because you've won that first target, and then you've just cut your losses and broke even on the second. So you've still actually won some pips, money, whatever you want to use on that trade. It's just for whatever, if you want that there, it's there. Expectancy, so what you're expecting to earn per trade. Risk reward ratio, that's pretty self-explanatory. So for every pip you risk, you would expect to win back 2.24 pips. Sum of the wins, so the total number of pips you've won, and the sum of your losses as well, total number of pips you've lost. Profit factor, I've put a little brief description on the side here, so for every pound spent you would expect to win back £2.24p basically. It's a bit higher on the first target, which is also, you know, that's why this is here for target 1, target 2. Is it worth you getting in and trying to take a second target, or is it just worth you risking full 1% rather than 0.5% per trade is it worth you risking the full 1% and just going for that initial target rather than trying to get the 2 targets hit? Losses in a row, so how many losers in a row, quite self-explanatory. Wins in a row, maximum drawdown in pips, so that will add up your total drawdown value. So here we've lost 500 pips, but then we're going positive, and then we're only down, whatever that is, it'll be that back to break even basically if you were to start here. So minus 500 plus 800 is plus 300, minus 300 is then 0. So our maximum drawdown is minus 500. If we were to go from 0 to minus, let's say another 300, let's go 800 actually. Minus 800, max drawdown should now move minus 1,102, minus 1,102. Recovery factor, again I've put a brief description here, but if you were to go into drawdown, the recovery factor is how quickly, compared to that drawdown, you will come out of drawdown. So say for example it takes you 10 trades to go into a 1,000 pip drawdown. At this one you would get out of that drawdown 1.17 times quicker, so probably 9 trades, whatever. So it takes 10 trades to get in the drawdown, but only 9 trades to get out. That's what that's saying. So recovery factor there, how X times faster than the drawdown, so how quickly you are going to come out of drawdown compared to how quickly you went into it. And drawdown duration in number of trades, so how many trades you were in drawdown. So if your account value went from 10,000 to 12,000, and you then traded below 12,000, it wouldn't take into consideration you breaking out of that drawdown until you broke that maximum account value again of 12,000. So however many trades you spend trading under that 12,000 roof, or resistance level if you want to use the trading term, however long it takes you to get out of that drawdown period is the drawdown duration, how many trades. In this instance it's 2 because we've only done a total of 6 trades. So yeah, I hope that makes sense to you guys. That is pretty much everything. It's exactly the same principles applied to the target 1, except you don't have this target 2 section, or target 2's here, target 2's here. Again, I stress the importance of putting the date and time into these boxes here, into the comment box, because when you come to, so if you were to use this spreadsheet to trade say an advanced cipher pattern on the euro dollar, you then create another spreadsheet to trade the advanced cipher pattern on the USD JPY. You then want to compile those 2 trades together to see what it would have turned out as trading them together in the past. You would then have to sort these from date value. So you want to put these in, you want to put the date in somewhere, even if it's not in this comment box, you want to include the date and time in this somewhere. And also some comments, about the trade management and stuff, just so you've got a record of that. Maybe if you move your stop losses or move your take profit targets, you can correlate that with whether it's a winning or losing trade, or if you want more when you did, more when you didn't, things like that. So I hope that makes sense, you guys. Any questions, leave me either comments below or send me an email through my website. I'll reply to them as quickly as possible. I usually get back to you, I can get back to you within a day or 2. Yeah, hit up my social media as well, TradingView, Twitter. Yeah, leave some comments, let me know what you think. I hope this was of value for you, and thank you for watching. Ta-da!